to me, I looked at that and wasn't like, oh, this is great. I've got a path to make a lot of money. I just felt like, all right, I'm locked into one thing. I'll be doing this one thing for the next 30 years. To me, that sounded incredibly boring. So I just felt a motivation to go do something very entrepreneurial and really take a lot more risk.
Matthew Johnson. He sold his healthcare software company 11 years ago after leading it through 3 rounds of fundraising in just 3 years. Alongside his twin brother Nathan, he then acquired and transformed TruConnect into a telecom powerhouse. Matthew also co-founded the technology investment bank, Drake Star Partners, leveraging his earlier investment banking career in New York City. Balancing life between LA and Switzerland, he also leads a non-profit providing wheelchairs to disabled children. Today, we discuss Matthew's truly precious post-exit lessons on staying motivated through multiple ventures while fully enjoying life and raising entrepreneurial children. So Matthew, thank you so much for joining me today.
Thank you for having me.
Very exciting to hear your story.
Looking forward to talking about it.
So Matthew, you had this really successful investment banking career in New York.
Mm-hmm.
Then you suddenly stopped and moved to LA to join a healthcare software startup.
Correct.
Right?
That's correct.
I'd love to know why.
Similar to other people who are in finance who decided to do something different, it was really about wanting to do something more entrepreneurial, even though I was making very good money in investment banking and was getting great experience. I just got to a point in my career where I said either I stay and I do this forever, and that's just the way I thought back then, of like, I'm locked in to be investment banking for the rest of my life. And the thought of that, frankly, terrified me. So I was like, I can't, despite the money being as good as it was, particularly back then, I just couldn't bring myself to do that for the rest of my career. It just wasn't, to me, I looked at that and wasn't like, oh, this is great. I've got a path to make a lot of money. I just felt like, all right, I'm locked into one thing. I'll be doing this one thing for the next 30 years. To me, that sounded incredibly boring. So I just felt a motivation to go do something very entrepreneurial and really take a lot more risk.
So you wanted to explore, you wanted a sense of adventure and see what else is out there.
Correct.
What's this life is about. Interesting.
Yeah.
It is quite fascinating because most people I talk to, they clearly had a financial motivator in their first startup.
Correct.
By necessity or by other reasons, usually, thinking about financial freedom more than
it was the
anything,
reverse. I had money and I said, let me lose money.
Exactly.
So it was the exact opposite.
Exactly.
And things played out just that way. So I started with some money, lost the money, going to a startup, and basically started all over again after that.
So I really want to hear all the details about that 3-year relationship you had with the startup, because you raised the money for them 3 times.
Yes,
right?
so it raised a fair amount of money for the company during the process of when I was there, and then ultimately didn't see eye to eye with the owner of the business, and finally just parted ways with the business after I think about 3 years. And that's really my brother. I have an identical twin brother as my partner.
Yeah.
And we had both had discussions about, hey, let's do our own thing. We were both just happened to be in Los Angeles, and so we made a decision to do something together at that point in time.
Yeah.
So.
And then you guys bought into what's now called TruConnect.
Correct.
So tell me more about that.
I like that expression, bought in. Wow. I mean, it's been a journey of highs and lows is the only way I can describe it. But when my brother and I, interestingly enough, we had started our own kind of advisory investment banking firm in LA. And when we did that, we really did it with the eye of, all right, this is something we know, let's do this, but let's look for opportunities to buy a business, invest in a business. So we invested in a variety of businesses over the next probably 4 or 5 years. And that's when we ran across a telecommunications company originally called Telscape. And the 2 of us thought, interesting business, not particularly well run, what if we buy it? And so we approached the board of directors, we put the money together somehow, and we made an offer to buy the company. The board accepted it, and we ended up buying the company, I think in 2006. Feels like forever ago now, so a long time ago. And really over the span of the next 15 years, the 2 of us ended up acquiring 3 or 4 other companies, merging them all together, and then building up the company from there. And I mean, last year, the company was the largest private company in this segment of telecommunications market in the United States.
Yeah, it's quite impressive. So it took you like 14 years.
14 years, and we never raised outside capital.
Amazing.
So we did it with our own money, our own, really just driving profitability, taking the profitability from the business and putting the money back into the company and thinking of ways, how can we diversify revenues? How can we streamline costs? And so really took a very, as I mentioned to you before, a very financial approach to the way we ran the business from the beginning. And make no mistake, we may be investment bankers and think we're super smart, but we made every mistake that every entrepreneur makes. Bad hires, terrible decisions, not getting rid of divisions quickly enough, keeping people longer than you should keep them. Every mistake you can think of we made. And so I think we rode a lot of highs, a lot of lows, but certainly in the last 2 to 3 years, the business has just done better and better year after year.
Yeah, it's really impressive what you've done to the company. So I've mentioned it to you in a different conversation that one of the reasons I found your story so fascinating and really wanted you on this podcast is because it's very unusual how you went from the financial industry into running a business, into entrepreneurship. And then we'll also be talking about the technology investment bank you're running now. But you basically went from the financial industry into entrepreneurship. You mentioned that you made all these different mistakes. Most of the people I talk to do the opposite, and they find investing really, really hard in terms of the mindset, how you think so differently. So if you do it the other way around, did you find your mindset, this change in the mindset was challenging for you?
That's a great question. I don't think I've ever been asked that question before. I think as we had discussed a little bit before, I think what was great was the background in investment banking. I think really helped both, because he was in investment banking as well. I think really helped the way we looked at companies and opportunities, because we really looked at it financially first, because we weren't doing just a complete startup. We were looking at a company that effectively had a broken balance sheet, and we understood financially what needed to be done to fix it. And so when we saw that, we saw a huge opportunity of, this management team doesn't know how to fix it. Financially, we know how to fix it. Let's buy it, fix it, bring a new management. We then made all the typical startup mistakes after that. So we did a great job of getting it financially structured and the business making money. And then we made the classic mistakes of hiring wrong people and entering into markets we probably shouldn't have entered into. But I think that background was very, very helpful, and it has been since then. As I mentioned before, I think one of the things we take a tremendous amount of pride with this company is the fact that we've never raised outside capital. And last year we did about $500 million in revenue, and we have not raised equity from anyone in anyone outside the business other than myself and my brother. So
because you don't have to.
Because we don't have to.
Because you structured it, cash flow first.
We did. There were 3 times we had to invest again. Not to sound like everything was perfect with this company, because it almost went under in 2009, obviously because of the financial crisis. We had to reinvest then. We did a leverage buyout of another company. We had to reinvest again then. So it wasn't all just purely cash flow, because we did invest several times. We just elected that we really didn't want to bring in outside investors, because we knew the pitfalls of doing that, because we'd both been at venture-backed companies. We both obviously work a lot with private equity investment banking, and just had no desire to have someone tell us how to run the business. And because we felt like we knew, even though, as I said, we made mistakes, we learned. And I think in the long run, it's been great, because obviously we have complete control of the business currently.
So would you sell that company now?
Would I?
Yeah.
If any buyers are listening, I'm selling. We've looked at selling. It is a highly regulated market we're in, which makes it more challenging. Obviously, as you'd mentioned, you were in software. That's the beauty of software. It's not regulated, and there's lots of buyers. Everyone knows the multiples. This industry is a little more challenged in that respect. So it really is more of niche buyers, and there's a couple issues we're dealing with the regulatory side right now. There's some wood I can knock on, and I'll knock on it now. That if we get through those issues that should be resolved this year, then it really opens up an opportunity to sell the business. And I think my brother and I would at this point, would be very open to that. So.
Okay, interesting. So you have this amazing cash flow, you own the business, you have the control, but you still wouldn't mind selling.
Yeah,
why is that?
Yeah, again, a good question. I think part of it's from this business. My brother and I have started other businesses. So we have a company in India, we have a company in China, we have a company in Israel. different companies we've acquired with some of the cash flow. Others we've just been total startups. As I mentioned, there's a fitness company I recently took over in Los Angeles. So we have other interests, and I've been doing this so long. I mean, if I put my financial hat on, no one's in a deal for 15 years. I mean, it's like the exact example of what you don't do. So I think for us, we would welcome the opportunity to be able to actually exit the business and focus on other things.
So would you say you're spreading yourself too thin, or you just have this itch again to see what else is out there?
Well, I think in the past we definitely spread ourselves too thin, because then in the past we were doing, as you mentioned before, like we're part owners of an investment bank based out of New York. Now I'm just on the board of that company. I've pulled back from that. I was trying to do that and run this business and run other companies we invested in all at the same time. And I had a mentor of mine at the time say, like, I think you're spreading yourself too thin. Yeah. And I was like, I can do all of this. Yeah. And he was right. I mean, 2009 happened, and that really opened my eyes up. All right, I can't be trying to run an investment bank, trying to run a small credit fund, trying to invest in all these different companies and run this business as well. So I think I learned a lot from that mistake, and really set about, my brother and I, in probably about 2012, where we just committed 100% of our time to this one business. Because at that point, the size was getting to the point where it was, okay, it's a big company now. We really need to focus all of our time on this.
So you wouldn't consider hiring a CEO, stepping down, focusing on other things. You would prefer to sell?
Ooh, I don't know if I can answer this question. My brother ever watches this. He knows what I'm thinking right now. We did try twice. Okay. And it was a miserable failure. Yeah, so I'm sure many other people might listen to this will have the exact same experience.
Exactly. Many people in my audience will say,
yes, you get the resume, you interview them, you're like this. And look, one of my blind spots, frankly, is hiring people. Like, I have a blind spot. I tend to trust people too much. I tend to expect the best. This person's going to come in and give it 100%. It doesn't dawn on me the fact that someone could get a job and basically view that was the whole mission of getting the job, and now they'll just kick back, take this big salary, tell everyone else what to do, even though they don't really know what they're doing. And we actually recently had a very bad experience with that in 2022. If those individuals ever watch this, you know who I'm talking about. And it was a mess, because I was so excited. It was actually 3 executives that I brought on, and I was very excited, and it was a mess. So within 12 months, they were all gone.
You don't want to go through that again.
No, I just feel at this point, we brought in a bunch of new executives, and the new team I have right now is great. Very, very happy with them. But my brother and I think are similar to many entrepreneurial owners, a little bit control freaks. We really want to be in control. I gave it a shot at letting someone else more or less run the company. And there was a path from president to CEO for this individual that we laid out, and it just didn't work. And I think from my perspective, at this point with where the business is now, I really want to shepherd it to its final destination. And as you said, I mean, I don't have to sell. I mean, I could just cash flow the business for the next 10, 15, 20 years and never sell. Yeah. But I think from my perspective, I think my brother and I would love to be take an exit and really do other things, because we have a lot of other interests.
So you also, in parallel, run your private equity firm. Would that be the right name for it? Or it's more an investment banking?
Yeah, it's an investment banking firm that my brother and I are part owners of. Yeah. We're minority owners of that business. Yeah. I'm on the board as an independent director now. So it's really just a way to stay involved in that world, but not actively. I mean, honestly, I'm just at board meetings. I try to help as the business is growing. The firm is called Drake Star Partners out of New York. They've got a terrific CEO, is a good friend of mine, running the business day to day. So my involvement with that is very much just from a board level. So the way I view that is, we have Drake Star, we have Cloud Mobile, we have Upverse, we have TruConnect, we have Wi-Fi. We have these different businesses where we're either minority or majority owners of the business, but we're not actively running any of the business other than TruConnect. Yeah. We're spending kind of 100% of our time on that.
And if you sold TruConnect, you would probably get more involved in the other ones.
Correct. Or, I mean, as I mentioned, I just got involved in a fitness app that I personally use it and I love it. It's called Shred, if anyone else likes to work out. You can download it on, obviously, you can download it both on iOS as well as on, wow, just totally blanked right there for a second.
It's all right.
Yeah.
Android.
Yeah, Android. Thank you. I was like, I don't know why I'm blanking on Android because I deal with Android all day long.
If you sold today, what would you do? Because you obviously had kind of an exit from your healthcare software business,
right.
So you've been in this place. Now on a personal level, like what would you do?
Well, number one, I would control the exit. So, I mean, I think one of the advantages that you'd alluded to before is the fact that my brother and I do have an investment banking background. It's very unusual to have two executives, both in investment banking, both running a business of this size. So, like, I know the game on how to sell a business. No banker is going to come to my office and, like, trick me or convince me to do something I don't want to do because I understand exactly how it works. I think a lot of individuals who, I mean, obviously not private equity backed, but companies they've built without really bringing in outside capital don't have that experience. And I've seen it firsthand as a banker, watching these people kind of struggle with like what all this means, like what do multiples mean? How do I understand, you know, the leverage that they want to put on the business to buy it, and do I want them to do that? Whereas with me and my brother, I know how the game's played. I totally understand it. I know the type of exit I would like, which is probably just a strategic buyer. Obviously, all cash. I'm not interested in stock. So I think from that perspective, we have had some other smaller exits along the way, like smaller companies we bought and sold and things like that. But this exit would be a substantial one, just given the size of the business. So it would be very hard for me and my brother not to be very, very actively involved in exactly how that exit occurred. What I would do after that, I mean, I'm not totally sure. I mean, it'd probably be more of what I'm doing right now. It's like looking for kind of unique companies where we could buy into something and own it, because I really have no interest in being a minority shareholder in something. And I think the first thing I'd probably do is buy something that's not regulated.
Okay.
Because that's one of the big reasons I'd exit this business, is just so sick of working in a regulated market.
It's a barrier to enter for
is.
Others, right?
And it's a psychological abuse you have upon yourself. I mean, it's just like being in healthcare or telecommunications or some of these industries that are so highly regulated, or aerospace, where you're dealing with these different things that are beyond your control in terms of how you're able to run the business without having to think about, like, oh, what if this regulator decides they want to do something stupid, and now suddenly I've got to run around and try to like address that issue in the business. This particular part of the telecommunications industry is very niche-y and very odd because the regulations are extensive. And so from that perspective, it gets really frustrating year after year. And each state has their own rules as well as federal rules. And we're very good about following all the rules, but I literally have an entire group dedicated just to following the rules of the industry. And I know if I were to do another business, I'm not doing that again. So for sure.
I can understand that. I had a telecom business actually, and at some point I caught myself thinking that I don't own it, or I own it together with the government, because the government was so involved in my business, almost like I had a partner, but that partner had the majority stake in my business because could tell me what to do.
Exactly.
So maybe you had a similar feeling. And we are control freaks, and sharing control with the government is not necessarily...
That's your worst partner.
Exactly, the worst partner. Hard to negotiate with.
Yes, we always joke in our company, like, it's a famous Ronald Reagan comment where he said, you know, I'm here from the government, I'm here to help. That's like the worst 8 words you ever want to hear in your life. If it's exactly 8 words, I didn't add it up, but it's true. I mean, it's I hate to say it, but you know, state regulators and federal regulators, they're there to regulate. But I think, you know, the problem is that you quite often deal with individuals who feel empowered because of regulators versus just doing their job. So it's really frustrating. So you're like, this shouldn't be this difficult. I'm trying to get a service. You're hiring me to get a service out to a certain population. That's what I'm doing. Just eliminate all the red tape so I can do what I'm supposed to do. So I think for sure I would not get in regulated business after this. So
Matthew, you and I had a conversation about angel investing. And I'd love you to share with my audience how you see angel investing versus the kind of private equity investing that you're doing.
Interesting. Yeah, as we commented a little bit before, I'm not a huge fan of angel investing. Just the interesting thing is again, I did it in reverse. I did a lot of things in reverse. So I was doing angel investing 20 years ago. Again, the classic angel investing in the west coast of the United States was like $50,000, $100,000 in 10, 15, 20 different companies. And I don't enjoy it because it's just, you have no control. It's all just a bet. I mean, quite often, there's lots of good salespeople out there. You hear all kinds of great stories. I recently lost, some money on another investment that my wife and I made. So I think I learned my lessons a little bit, but not completely. But I think from our perspective, and mine and my brothers in particular, the angel investing part just doesn't excite me. It doesn't get me excited. Having someone have a great idea, I think is amazing. And there's great angel investors, many who are members of Tiger, some are in my group as well. I'm not one of them. I don't think I made any money on my angel investments. I think it was like 0 for 15. Yeah. So I was like, I'm done with this. Yeah. So probably similar to you and other people who have built and grown a company, really having, and not just the control, but having more ability to influence a business, to me is way more exciting than, let me put a little money here, here, and here, and let's hope this works. So just not something I enjoy.
So we talked about how you do things differently from everybody else I talked to, in the sense that you are an investor first and an entrepreneur second. So your motivation to start a company wasn't financial. It was more about exploring life. Would you say you've achieved what you were hoping for by starting a business and run, or at least joining the business and running it successfully for 14 years?
Yeah, I would say I had, but I had no idea I would take this path. So, I don't think my brother and I ever intended to be in this industry. This opportunity just found us. Yeah. And then, candidly, originally as a financial person, our goal was to streamline costs and sell it. Buy it, streamline it, and as they used to call it, flip it. And that was really our whole goal. Yeah. And I like to tell people, at this point, I'm 15 years into a 5-year plan, which was to buy the company, streamline, sell, move on to the next thing. And I think some of it has been out of just necessity, and I think other part of it's been out of, my desire. The more my brother and I got more and more involved, the more we really enjoyed building the company, because I do think anyone who is an entrepreneur at heart, I'd like to think I'm more of an entrepreneurial person now than I'm a finance person. I feel like it flipped probably 12 years ago. Yeah. Where I really enjoy building things. I don't get as excited about being on the financial side of the business. I really like finding the right people, getting a team together, focusing on a strategic goal, executing that goal, and then getting the financial performance to follow that execution. To me, at this point in my career, that's way more interesting than just this business looks interesting. Let's find a way to structure a way to buy it. Yeah. So I think that's changed.
Do you think that creative builder's gene was always in you, or it developed over time?
I think it was, because I think that's the reason I left investment banking. I think I felt something pulling me.
You were in the wrong place.
Yeah, I was in the wrong place. And I really suck at working for other people. It's a fact. Ask any of the people I used to work for in New York. I was terrible at working for other people. I just always felt like I couldn't fit in a box. And I'd have people I reported to being like, you're just supposed to do this. You don't need to go beyond that. And I'm like, that's not the way I operate. So I think for me for some people who've been wildly successful in that industry, hats off. It takes a real ability to deal with all the politics of that industry, not only the hard work, but a lot of politics. Just wasn't something I could do well. And so I think that entrepreneurial bent in me finally just forced me to say, all right, I'd rather lose millions of dollars and leave this job and go do something making zero. Because the company I joined actually ended up effectively being bankrupt when I joined it. So I got there and we didn't get paid for 18 months or something like that. So good experience. Not a good financial one, but a good experience.
Yeah, we talked about it. An expensive lesson.
An expensive lesson, yes.
Yeah, it happens. Yeah. So on the personal side of things, how does your wife feel about your change from the financial industry into business? Or were you married at the time?
We were. We've been married for 21 years. Yeah. I know the date. I know the date's better than she does. So this is always a joke we have. But no, I think she's always supported whatever she's seen me do that she knows motivates me. I think one of the things always people talk about, with good entrepreneurs, this seems like a kind of classic comment that everyone makes, which is you have to have grit. But it's true. Yeah. You have to have a certain kind of relentless drive to get things done. And I think both my brother and I have that, and I think my wife always knew I had that. so even when I was in investment banking, I think she used to think like, why are you doing this? Like, this isn't you. Like, she used to be kind of my biggest proponent, even when we were dating, of like, why don't you go do something different? This clearly isn't your thing. And because I mean, even though I was doing it and I enjoyed it at times, I actually kind of deep down kind of hated it. And she was like, why are you doing this? You're working 100 hours a week. Go work for yourself.
Yeah.
And so I think when I made that move, she was very, very supportive. I mean, obviously she was nervous because when we did get married, I think, when we did get married, I mean, basically I was broke. So I was like, all right, now I have to make money. So
entrepreneurs have this crazy rate of divorces because often spouses don't understand why somebody behaves that way.
Yeah, no, so I think with
she's a psychologist, your wife, so you're lucky you married the right kind of person.
She understands all my issues, but I do think she has always been very, very supportive, and I think she knows. I mean, she sees how hard I work, and she jokes, as well as some of her family members, about kind of the relentlessness that I think every entrepreneur has it, but I certainly have it as well. Of just every day just kind of doing what you have to do to make things work. And I think for her, I mean, obviously the lifestyle that we have now, it's worked. So like we're able to do, I mean, I think there's a comment that I always read about kind of, what does entrepreneurship or running your business or exiting or whatever do for you? And I think it's true. It's not just about the money. It's not just about the control. It's not about the kind of feeling good about yourself. At the end of the day, I think it's the freedom.
Yeah.
I mean, because at the end of the day, the ability to say, I can do what I want to do. And if I want to live in Switzerland or I want to work in LA part-time, I can do that. And there's so many other people in this world that never are able to do that.
Yeah.
They're bound to a desk, or they've got some of the job or some of the commitments or other things are going on financially just to give them that freedom.
Yeah. Though I have to say that at some point I felt that having too much freedom is actually very stressful after my first exit. And I then realized that freedom is such a beautiful thing, but it's only a resource, like money, like energy, like everything else. We can have it, but then it doesn't translate into happiness necessarily right away. We still need to use that resource very wisely to get ourselves to a happy place.
Right.
So I wonder how you think about it. You have financial freedom. You can basically do whatever you want. I know you're running a business, but you could basically maybe tell your brother you don't want to do it anymore, or try to hire someone else
I'm thinking about that right now, Nathan. This is you got this.
Okay, blame me, Nathan, if I seeded the wrong idea into your brother's head. But like if you basically have all this freedom, like you can do whatever you want, you can live whatever you want. How do you feel about it in terms of how you can translate it into a more fulfilling life, a more purposeful life?
Wow. We're getting philosophical now.
And whether you're doing it. I want to challenge your thinking a bit.
I mean, it's an interesting question. I think you get over a certain age. I mean, I didn't have an exit young. So it wasn't like I had some exit like in my early 30s. I was like, oh, I've got all this freedom and all this money. And that might have been a disaster. So it took me and my brother a long time to get to this point where we do have the financial freedom to kind of do some things we want to do and live a lifestyle we'd like to live. But I think from that perspective, I think it's really, at the end of the day, for us, ultimately my goal is to find a way to exit this business and then find a way to do other things that are fulfilling, whether it's like charitable work or, my brother and I are fairly involved in a lot of different charities and donating money and things like that. But I think just spending more time doing things like that probably would be more fulfilling. But I'm not, philosophically, part of the issue for me is like, even if I sold this business, I don't know if it's going to be enough. And it's just the way I'm built.
Enough of what?
I don't know if it's going to be enough. Like I'll need to do something else. Like even if it's a lot of money, it won't be like enough money. And maybe that's the wrong way to look at it, but that's kind of the way I feel of like internally and maybe that's a bigger issue that I need a psychologist for. But
is it? Well, you have one at home.
So she doesn't know how to help me with that issue.
I expect you to be quite psychologically advanced.
Yes. Well, I mean, she doesn't hate that answer probably. She's like, oh, it's not enough? Okay, keep going. So.
Okay, but would you say that if you don't feel satisfied, if you don't feel you have enough, that affects your level of happiness. Or you actually embrace that feeling you don't have enough because you feel this is the source of your drive.
Yeah, maybe it's the driving source is not feeling like you're enough, so you have to keep doing more to be enough. I don't know. Maybe that's part of it, but I think for me, now that I've really discovered I like building things, I think it'd be very hard for me to sell a company and like go on the golf course.
Yeah.
It's just like not my thing. Like I enjoy golf.
It's not fun for you.
But after like a week, I'd be bored out of my mind. So like I think I need the challenge and the adrenaline of doing something. And I mean, some entrepreneurs, I know a couple that are very happy. They're retired in their early 50s and you know doing pretty much nothing, and they're good. And for me, I look at that. I'm like, I could never do that.
I actually find that for most people, it's just a temporary solution.
Yes,
and if
probably.
Because you need to feel you're growing, you need to feel you matter,
right.
that you're contributing something,
right.
and that if you're getting recognition back from the society, it's for something valuable. I think we all need that on some genetic level.
No, I think it's true. Work. I mean, I wish I had a better answer to that because I mean, it's actually I'm going to think about this question after this interview, but I think at times I'm like, all right, like what would I do after I sold this business? And like I don't know that I have a great answer. All I know is like I don't think I could just say, all right, let me take like 5 years off and travel the world and do nothing. I can do all that now. I can travel as much as I want. I can go where I want and still be involved in doing things with the business. So
yeah, and you like that? I
do like that, yes.
Talking about traveling, so you now basically live between Lugano, Switzerland,
correct,
and LA, which is very far. You travel once a month back and forth. How does that work as a lifestyle?
I mean, it's not easy, especially the first year was challenging as hell. But I think over time I've grown to like and appreciate it. The fact that I think I look at it more, even though I'm tired and sometimes a little bit worn out by it. I think I just have a grind mentality with a routine that I know what my routine is when I get to Los Angeles. I know my routine when I'm in Switzerland. And so I just stick to the routine, get up early, work out. Yeah. If I fly in the night before, I'm up early the next day, working out, just doing my routine as if I never left. And for me, that's very helpful because it just gives me the mindset of, all right, I'm in LA, I'm here to do this, or I'm in Switzerland, I'm here to do this. And it's a luxury to be able to say, okay, I can live in Switzerland and live in Los Angeles and have the ability to kind of go back and forth really whenever I want. And so that's, I think a luxury that, while challenging, I think I'm very lucky to have. So if you were to rate your level of fulfillment in life from 0 to really 10. Philosophical. Oh, yeah. I didn't know we were going to these questions.
No, we're good.
We're good. Next one, we're going to marriage questions. So
yeah,
we're just
next. Warming up.
Yeah. So, oh boy.
So on a scale from 0 to 10, how fulfilled are you overall in life?
I mean, I would say pretty high. I mean, I would say probably. I don't think anyone can say a 10. I mean, so I'd say probably like an 8. Yeah, that's high. Yeah. No, I feel like. I think if the people specifically like around you are happy, like at the end of the day, I've got my sister-in-law, my wife, my kids, got a great lifestyle in Lugano, and everyone's very happy. Like, I think at the end of the day, you look at that and you basically get a sense of like, all right, like I helped make this happen. Yeah. And so I think from that perspective, that provides a lot of fulfillment. Of course, yeah. So you must be proud of your own achievement that you could do that. Right, makes a lot of sense. You see the lifestyle you give people, and it extends. I mean, my wife and I support a large part of our families on both sides. Yeah. So I think the ability to do that and kind of financial freedom and flexibility to be able to do that, I think that provides, a great sense of accomplishment. Yeah. Like, all right. Here's others who you're related to or maybe need help or need support, and you don't always love giving it. I'm not gonna lie, at the times you're like, I'm done doing this. But at the same time, the ability to do it, I think, makes you feel like, all right, this is, I think you can't not help feel like, all right, this is a great sense of accomplishment of being able to do that. Of course.
And I can totally see how it also feeds into, the sense of love and belonging in the family, and you play such a crucial role in the family. Yeah. That makes a lot of sense. Anything else that feeds that high level of fulfillment for you?
I would say, obviously, I think the obvious things outside of the kind of contentment that's around you is obviously I think having a really great marriage, having 3 great kids who are all healthy, smart, doing well. And you see that, and you see kind of like the fortune that I have to have all those things. As you said, like quite often entrepreneurs' marriages don't work for different reasons. And I think I'm lucky in that regard that I've been married 21 years. She's been incredibly supportive throughout the entire process. My kids are great. And I think one of the things I didn't mention before is I think the fact that you get the opportunity, and at least I did as an entrepreneur, like spend a lot of time with my kids.
That's brilliant, given that you have to fly back and forth a lot.
You still this is obviously they're a little bit older now. When they were younger and I was like working at my company, I really made a point of spending a ton of time with my kids. So like I feel great that I was able to build something at the same time, not like always gone. Yeah. If I had stayed in investment banking, I would have been traveling all the world, gone for weeks, months on end, on someone else's schedule. Yeah. And the ability to like have a company, still spend a lot of time working on it, but then also having the ability to say, all right, hey, I'm spending this weekend with my kids, and I'm going to coach Little League and do other things like that. And so I leaned into that pretty heavily when they were younger.
And now you're saying that you feel happy that you avoided that very typical regret of people who stay in investment banking and never have that luxury.
I hear that a lot from I have a lot of banker friends, so I hear that a lot that like I missed out on my kids growing up. I was working 100 hours a week. I'm on someone else's schedule, so my life is not my own. And I think in that regard, my kids have to back me up on this one. I spent a lot of time with them when they were growing up, so like I was probably a little bit psycho because I very much wanted to be an active part of their life growing up. So it wasn't like, I never saw Dad. He was always traveling. He was always working. And so I think that's been great. And I think I like to think I have a really good relationship with all of them. So
would you like your kids to be entrepreneurs and not have a corporate job?
Absolutely.
Okay.
I would
Do you
never
tell them?
I don't tell them anything. I really don't. My father didn't. He was. My father was head of neurology at Johns Hopkins for 20 years, a very accomplished doctor, and he never once said go into medicine. So I think from that perspective, I would never tell them, you should be an entrepreneur, you should be a doctor, you should be a lawyer. Definitely don't be a lawyer. No. You can hire those guys.
Yeah, exactly.
I got lots of them. But I think from that perspective, I think I would never tell them what to do. If they came to me and said, hey, Dad, I did this as an experience to work at this company and I want to quit and start my own company, I'd be like, great. Like, let me help you with that.
But do you consciously realize that you are a role model and you're probably affecting their thinking by doing what you do? And that's how you deliver that idea to them.
Well, I think some of the risk, and I'm sure you experience this as well, is, financially, none of our children necessarily would have to work again. If you really take a step back and be like, all right, my kids can do nothing if they wanted to. I wouldn't be happy with that at all. But I think that's one of the challenges, though, trying to balance out of like, how do I ingrain in them kind of a work ethic while also providing them with kind of a unique situation where like they have some financial stability at a very young age. And so it's a difficult...
How do you go about it? Because there are two schools of thought, really.
Give it all away like Warren Buffett or...
either you bring the children in and you train them to manage wealth and you're very open about everything, right? Or you're saying, no, you guys need to be hungry, I'm not giving you anything. So you make your own mistakes, you're driven, you need to build your wealth yourself. So in that spectrum, where are you in your thinking?
I think believe I'm probably in the middle, because I think it's a little bit of both. I certainly think we're not the type of parents to like lavish things on our children. And yes, they've had unique opportunities to live in Switzerland, go to school in Switzerland and do things like that, but those are more experiential. They're not just about like, let's spend money on stupid things. So I think from that perspective, they've seen that. They know that we're not so frugal that there's like, why don't you spend any money? But at the same time, I think they've learned from that, and I think I learned that as well from my parents. My parents actually were very frugal, and I learned kind of like the value of money, and kind of like, all right, well, it'd be nice if I got older if I had more money that I could spend. So I think we have instilled in them that sense of the value of hard work and getting money. At the same time, we are starting that process of really introducing our two oldest, because they're 16 and 17, to the concept of you will have money, and it's by most measures a substantial amount of money at a fairly young age. Like, how do you manage it? And so there's actually a lot of great firms out there. I've just moved to one of them on the wealth management side that's helping. They actually put together courses specifically for children of business owners who've exited and things like that, to really build a relationship with the money at a very early age, so that you don't do dumb things with it, like get an inheritance and go out and buy a Bugatti or something idiotic like that.
Yeah.
So,
and there's a big trend now of second generation giving money away, and they mean very well.
Yes.
But they don't necessarily have the financial discipline and an understanding
Correct.
of how to do it right.
Yeah.
It's a huge,
it's a huge
trend.
I'm going to forget I know everyone's heard this one, but I forget the old concept of, a poor man. I'm not going to get this right. You start out poor, and then you get rich, and then by the time you get to the third generation, like basically you're back to being poor. Because people just find a way just to blow the money in kind of the second and third generation. So I think we're trying to show them how to invest long term, and using this financial wealth management group that we're using now to kind of have this class to show them, hey, we're investing for the long term, not just for you, but for generations going forward, on how to basically preserve capital and not just waste it on things that cause you to deplete your resources.
So if we go, if you imagine that I just sold a business, and for the first time I have wealth to manage, and I don't know how, but I theoretically would like to invest into other businesses the way you do, and I came to you for advice, like, tell me the basic rules of doing what you're doing so successfully.
Well, I would caveat a little bit. I don't know that I've been that successful, but there've definitely been some really bad misses.
But you've learned your lessons.
Yeah,
I've
learned some lessons the hard way. I mean, losing money is the best way to learn a lesson.
Exactly.
But I do think that people who've like exited business and then, I think it's different strokes for different folks. The whole expression of just kind of like, if you're really good at like building a business, I think trying to go from that to basically investing in business to try to acquire business, I think that's just a total different skill set.
Exactly, it's very hard.
It's very hard to do, and I've seen people try to do it and be awful at it. I think I started young enough with a financial background, focusing on using that financial background to actually acquire my first couple of businesses. I like to think that question you asked before, that actually going to reverse that in the last 15 to 20 years. So I feel like if you start really, really young from a financial perspective, doing that investment and then learning from those mistakes on small things, because we made a lot of mistakes on small companies, and then build that and then grow your own business, whatever it is, I think then maybe it's a little bit different. I think someone being just a pure entrepreneur, cashing out for whatever, 100 million, and then you're like, you know what, I'm going to go into buying companies. I think you're better off just investing that money. Because I think you'll learn the hard way how to lose money.
Lots of people do that, and they do lose money. Like my observation, I've been talking to exited founders for 13 years. My personal observation is that number one way for people to lose money is to start a new business right away before they actually understood what made them successful before. And that
common one.
And that combined with the desire to not have outside investors means that they put all
their money in
before doing proper exercise and capital preservation. They put too much money in. They're too optimistic. They're too, I should say we, because I made this mistake. We're too arrogant, right? So that is by far number one mistake, because it just eats so much money so fast, and it's very hard to stop, right? Well, to get out of it. But the second one is buying into other businesses, thinking that, expecting that you cannot work as hard as before,
right,
but yet get the upside.
Get the upside, yes.
So tell me how you think about it, and whether, if I were this person asking for your advice, whether you would tell me go for it.
Well, it depends on the business. I mean, also the industry. I know plenty of people have gotten very. I think it's also timing too. I mean, you had some exits very young. You made a lot of money, and I think those sort of experiences are like, oh, this is going to happen every time.
Exactly.
And the fact of the matter is that a lot of entrepreneurs, lightning only strikes once. So the reality is a lot of people only have one great exit. And then they think it's going to happen over and over again, and it just doesn't.
Yeah.
And one great exit's all you need, frankly. But I think the perception that you can automatically multiply that because you're successful once, I mean, it's unusual for that to happen unless you're someone like Elon Musk or someone like that who's truly kind of broken the mold in terms of being just a repetitive entrepreneur with a high level of success. I think you're better off, if you're going to invest and you've had a successful exit, invest in something you know. Like the one thing you cannot do is exit a software business and then get in like movie production, or exit a software business and go into consumer products.
Well, even in software business, it's a whole world. It's a whole universe.
It's its own world, but within a niche of software, whatever it is, like SaaS, and you're saying, all right, like if I'm going to invest in another business, it's going to be in the exact vertical that I played in because I know that vertical cold, and it's going to be in a CEO that I've met and I know from a previous life who can execute. I think there's so many earlier stage businesses out there you may invest in. I mean, terrific salespeople. I mean, we've all seen them. Frankly, a lot of them, I mean, I think I'm a little biased on this comment, but a lot of them don't have the grit to, if you want to be a successful entrepreneur, you have to suffer.
Yeah, that sounds like
you have to suffer. No, and it's true. Like, I mean, I think
but it's true.
Anyone who's done this and been successful at it, like, you have to suffer and you have to keep going.
Yeah.
And his comment to this class, I think it was Stanford grads, was like, you guys have had it too easy. You guys really have never suffered. Like, you've got full paid tuition, your parents paid for everything, you've gone to poshy school, you're going to make $200,000 a year leaving the school, you've never really suffered. And so I think that is very true in terms of like being able to really be successful, like a willingness to take on that suffering and power through it.
Well, but this is exactly what exited founders hope to avoid by buying stakes in other businesses.
But the problem is, you quite often you're going to invest in that person who's not willing to suffer, because you're going to think, oh, this person's like me. They're going to, no matter what, they will make this successful. The idea is great. They're smart. They went to name the school. I'm going to make $1 gazillion with this person because they have what I had. Yeah. And the fact of the matter is like, you can't figure out whether they have what you have until you see them do it. And I've seen a lot of CEOs.
How do you avoid this mistake? Because now you have a lot of experience doing that.
How do you avoid that mistake? I mean, trust your instinct. I mean, I think that's the only thing you can do. Like, I've recently had a very bad experience where my wife had, actually, if you're lucky enough, my wife's a psychologist. I should invite her to every interview because, her instinct's always like, don't hire that person or don't do that investment, and I'll do it anyway, and I'll be wrong. And I'll be like, I'll be like, oh man, I should have listened to her.
I told you so.
Yeah, I told you so. So if you have a wife like my wife, just take her to every meeting, and she'll say yes, no, yes, no.
Perfect.
But
not everyone has that. Weapon.
Yeah, but you have to listen to them. So let's learn by mistake.
So you have a secret weapon, but you're not using it.
Yeah, I haven't been using it. I'm using it now. But we both learned a lesson on this one company because we both ignored, in this case, we both ignored our instinct, and we thought the idea was great, loved the fiery drive of young 20-year-old entrepreneurs. And the reality is once we got involved in business, like, it was obvious that neither one of them had, I hate to keep saying it, but they kind of had the gene of willing to suffer and really work hard. For them, it ended up being, oh, we got the investment. We're successful entrepreneurs because we got an investment. Yeah. I was like, no, the game just started.
The start, exactly.
We just started. It's not the finish line.
Yeah.
And I mean, that company failed so fast, it wasn't even funny. It was, I think, inside of 12 months.
So why do you keep doing it though? Are there better ways to invest money? or you get something
Like
else
glutton
out of
for
it?
punishment. I think maybe that's it. I mean, in this case, because I mentioned the comment before about being an angel investor, like I hated, for me, doing the little tiny investments where like you own very little of a lot and they all fail is no fun. In this case, it was something that was kind of a passion project. We had majority control of the structure we put in place. So we felt like, oh, this is a good bet. We're excited. We love the idea. We love the team. And I failed so quickly. It was actually kind of embarrassing. So, I won't mention who they are, but, it was not a particularly good investment.
Okay, so any other advice or guidelines besides listen to your intuition?
And intuition, everyone always says that. No, like, that's terrible advice.
Do you have a criteria that's objective when you choose your portfolio companies, or you really think it doesn't matter?
I mean, objective in terms of industry, or
like what's the criteria? Like
for me,
the revenue, the margin.
Yeah, I think it is. You talked about like how an entrepreneur, someone not like me who'd sold their business and that's all they'd ever done and that's what they know, and now they say, hey, I'm going to go invest in companies, is a little bit different than someone like me who's always kind of done this and then grew a company.
That's exactly why I'm asking you that question,
so
because you're a very unique expert for me.
Yeah, it's a very different philosophy for me. Like I think for me, like I'm very industry agnostic. It's more the opportunity, so which is the exact opposite advice like what I just gave you for someone who came from that industry. I'm like, don't do what I'm doing because that's not what you do. Yeah. I look at the financial opportunity first. I look at the industry, the size of it, what's broken with the company, because there's always something broken. We've got an opportunity to invest in a company. Because I don't like to do startups, except for this one example I just gave you, and now you know why I don't like to do them. Number three is at the end of the day, you've got to find a way to really vet the team that's going to run it, because it's always the expression of betting on the jockey, not on the horse. Is I think my Kellogg professor told me that like 20 years ago, and that's so true. Like that is one thing. You've always got to bet on the person who's running that business, not the idea or the concept. Because if you'll find a really gifted entrepreneur and you can invest in them, they'll figure out a way to make it work. They'll change the strategy, they'll adjust the plan, if it's software, it's whatever.
As long as they have the gene for suffering.
Yeah, I mean, but I think those go together. I think when you find a really talented entrepreneur, they've got the gene for suffering, the ability to make things work no matter what, and kind of unwillingness to quit. And so I think you put those three things together. Now, finding those people is hard, because like you really have to see them execute. Yeah. And you're going to see them execute once you put your money in.
Exactly.
So that's the trade-off.
Otherwise, there's no transparency.
I think this person is the right person. But I think over time, I think for me and my brother, it's really just looking specifically at opportunity of like, is there something very unique about this business which we think we can take advantage of, given our skill set, which is totally different from someone who's coming from a very specific industry. That's all they've ever done. Because it's just a different way of thinking. You got to be like, all right, let me think financially first, and then about the entrepreneurial opportunity.
So going back to what motivates you, why you're doing it, because years ago you decided it's not really about the money for you.
Right.
So, but it's very interesting for me to understand it. Would you say it's the love for the game? Do you really want to keep doing what you're doing because you love doing it? And obviously, you said it's never enough question. Money.
Do I love doing? My executive team are watching, so they start laughing because they'd be like, we always joke about the regulations make this somewhat painful. I mean, as I said before, I think it's more the love of building something.
Yeah. So building anything. So it doesn't have to be this business, but
building anything. I think when you've got a good team and you see it, I mean, you've seen it. Yeah. When you've got a really good team, it's fun.
It's fun.
Everyone really rallies around the strategic vision. Everyone gets excited about what you're doing. They're like, even in the hard industry, they're like, we're better than everyone else. And you consistently prove you're better than everyone else, and you feel even better about yourself. So I think that kind of that iterative process of building something for me, and perhaps for you, is what like gets me like excited. Yeah. Like just giving someone money and saying, I hope this works, like doesn't get me excited at all. Yeah.
Which brings us to charity. Because I think lots of people, when they're honest, would say just giving money to charity doesn't actually give me much satisfaction on the personal level. I may still do it because I think it's the right thing to do, but in terms of getting a bit of that fulfillment, that's not the source of that for me. And I know you're involved in the charity giving wheelchairs to impoverished children. So tell me more about it. What's in it for you?
What's in it for me? Absolutely nothing. No. It's a great charity called Momentum Wheels for Humanity. It's based in Los Angeles. I've been the chairman of the board for 8 years. For a long time, I've been involved in the company, and it's a terrific charity. When I first got introduced to the charity from a good friend of mine, he had said, "Oh, I think you'd come to a meeting. I think you'd like this." At the time, frankly, most of us don't have time for charities. Like, I am the charity. Like, I'm a charity case. I have no money. I'm broke. I have no money to give away. Like, well, think about it in the future. And so he got me involved in this charity quite a long time ago. And then I subsequently became the chairman of the board of the charity. And what I liked about it, as soon as I saw it, was global, it was immediately impactful, and it was for children. And the fact that you can basically deliver these wheelchairs around the world to third world countries and make an amazing impact on the lives of not only his kids, but their family and everyone else around them in the community. And some of the early videos I saw, we've toned them down since. But some of the early videos were really hard to watch, because you're just seeing how some of these children are living unable to move. And you saw the impact of what this had on these kids having an actual wheelchair and being able to move and go to school and being an active participant in the society that they live in. You're like, wow, this is an amazing charity, because more often, and there's some great charities out there like UNICEF and things like that do amazing things around the world, but you're so removed from the impact, and there's so much administrative and cost, frankly, of every dollar comes in just to administer whatever service they're providing. And what I thought was unique about this is, I think at the time it's gotten better, but I think it was like 90 cents in the dollar was reaching and delivering an actual product to these people most in need. So I thought that was really impactful, and I thought the group and the way they were organized and the way they're focused globally. So it touched a bunch of key points for me, like the global impact. I loved to travel all over the world growing up. I actually seen a lot of poverty in the world growing up, and particularly with children in poverty. And then just, I'm fortunate enough not to have any children who are disabled. But seeing these kids who are really unable to live a normal life have their life completely changed just by wheelchair was a pretty incredible, impactful situation for me. And I mean, now, as you asked before about where you get fulfillment, I mean, my wife and I are both fortunate enough now to actually be in a position to donate more money to the charity. And I raised a ton of money for the charity over the last 3 or 4 years. So to see that impact, and they brought new leaders in the charity. It's now tripled in size in the last really 3 or 4 years. I'm not taking credit for that. I mean, that's really the leadership of the charity that's really done that. But I think that's been great to see. And those types of charities are kind of what really get me interested.
So your involvement is mostly in fundraising. Somebody else is running it.
Yes, correct. So I'm the classic chair board person who tells all the board people, we all need to raise money, we all need to put money in.
Yeah.
And so
it's important, otherwise it can't function, right? Yeah. Somebody has to pay for the wheelchairs.
Exactly. And it's got to be, you need a board that's actually involved. There's lots of charities where people are on the board just purely because it's prestigious.
Yeah, vanity.
Yes, vanity, exactly. And this is a smaller charity that is kind of less known than it should be. And so it's definitely not vanity. And it's something that I just felt passionate about, because both my wife and I are both on the board. And so we've been involved.
So you do it together.
Yeah, we do it together. We've done it for quite some time. And really our core contribution really is raising money for the charity. Because at the end of the day, between grants and everything else, that's the other big piece, is just financial donations from sponsors. I bring in a lot of corporate sponsors, things like that.
So you basically spend also your energy and your time, not just your money, on the charity.
Yeah, I do. I spend a lot of time in the actual fundraising process, because it's not just me writing a check, it's me convincing 20 or 30 other people to write checks. And so it's gotten to the point now where it's, it starts building momentum on itself. And, hopefully, once I'm off the board in the future, this can just kind of have the momentum just to become a larger and larger charity.
And how do you see your charitable activities in the future? Would you like to spend more on this one, or would you like to diversify? Again, for example, you sell TruConnect tomorrow, and you have more time to think about it.
Right.
And
I think
more liquidity, I assume.
No, I definitely think I would be more involved in different charities. I also have other things that I enjoy, and I mean, there's certainly some vanity investments out there I'd love to make, but I think the charity side, I would definitely look to do other things, because I've been doing this for a while, and I think my wife and I would love to find other things that we could do on the charitable side that are a little bit different.
I love how your life seems to have these chapters. There is a tendency to get tired of what you're doing, and then you want something else.
I gotta find something new to do.
You keep repeating that through the whole interview.
It is
that
a
you were ready.
I'm ready to do the same thing all over again. So
no, I guess something else, right? That's great.
I need to suffer some more, so I'm gonna suffer some more.
But I like that. I like to live life in chapters and know. Okay, I think this is how you make your life feel longer. That you close one chapter, you go to the next one, you learn again.
Well, I think it's what you had asked me before about, like, how did I decide to leave investment banking? I think the fact that all the chapters were laid out for you, I was like, ooh, I can't live my life that way. Like, I can't.
It's someone else's life.
No, it's someone else's life. I can't sit here and look forward and be like, even though I'd make a lot of money, being like, all right, I know I'm going to do the exact same thing for the next 30 years.
Yeah.
Like, I was like, I can't, it's not me.
Yeah.
I'd rather wake up and be like, I don't know what I'm doing today, but it's not that.
Yeah.
And I know I'm focused on this and trying to build this.
Yeah.
And who knows what tomorrow is or next year is. Or maybe we sell in 6 months or a year or 2 years. Who knows?
Yeah.
But I think that unknown, I would think for a lot of entrepreneurs, that's what makes it exciting, because there's the unknown.
Yeah, absolutely.
I think when everything's laid out for you, it's like, that's boring.
Yeah, absolutely. So outside of a business, outside of your team that works for you, how do you choose people you spend time with?
Wow. How do I spend? I mean, I would say one thing I'm very well aware of is who I don't spend time with. Probably less so than people I do. I mean, I think everyone spends time with people they enjoy being around, have fun with, and enjoy their company. I think I really, in the last 5-6 years, I've been really cautious about the old adage of, like, don't waste people, waste your time.
What does that mean?
For me, it means, like, really, I spent a lot of time early in my career putting way too much trust and time into people who didn't deserve it. And, like, I'm really cautious of my time. Because at the end of the day, I mean, it's a finite resource, more valuable at this point than money. I think once you get over 50, like, would you give more money to be younger? I think the answer is yes.
Yeah.
So I think, it's a finite resource, and I wasted a lot of time with people. I look back on it, and I learned, but I spent a lot of wasted time with people who weren't going to help me get to the next place, weren't the people I should have involved myself with to kind of evolve my career. And I learned a lot from that. And I think that, to me, only recently have I come to the realization, and I think it's similar with the hiring thing, that kind of blind spot. And now that I've admitted that I've got it, is to take the time, really, when I'm assessing a relationship, be like, all right, is this a person that is going to be a good use of my time? Not that I'm going to get something out of it, but more like, I don't want to waste time with someone who's just going to waste my time, like trying to figure out what they can get from me.
How exactly do you measure that?
That's a good question. I'm still working on that. I think you can sense it. I mean, I think I've gotten at least, you get a certain age where you kind of sense, like, all right, this person, and it really gets down, like, when someone's trying to get something from you, and, like, it's not reciprocal, and it could be anything, not just money. But you're just like, all right, like, I get a sense of where this is headed. I'm out. And I think when I was younger, I always benefited the doubt of, like, oh, well, this person's bringing this opportunity, even though there's some red flags, I'm ignore the red flags because I see the opportunity. And I did a lot of that early in my career, and I think that bled into some personal relationships as well. And I think my wife and I talk about this a fair bit, of just like, hey, let's, like, really, I mean, I think, again, when you also have a certain amount of success, like, you need to be careful with the people you surround yourself with, because at the end of the day, I mean, there are people looking to take advantage because they see you have something, they want it, and they're like, I'll do whatever I can to kind of maneuver my way into your life to get it. And so you just have to be, I think, a lot more cautious. And I think early in my career, that actually helped me now, because I'm very, very aware of, like, when I feel like, all right, getting a red flag here on kind of what this person's intentions are.
Yeah.
So.
Oh, very interesting. So you're focusing on intentions. Because,
Yeah.
my litmus test is whether I left the conversation and I felt inspired, or actually during the conversation,
Yeah.
if I feel inspired, that word works for me. In a way, it's energy, right?
Yeah.
But it's a particular kind of energy. Like you want, to be a better person. You want to do more interesting things. You want to go and explore something. Like inspiration.
If you still want to talk to the person, that's probably a good sign.
Yeah, but I want this inspiration,
Yeah.
right? That they pushed me a little bit somewhere where I feel more excited, more alive.
Interesting.
So that's kind of my test
Yeah.
for it. But it's very
Mine
interesting that
sounds
you're
very
looking at
cynical.
no, but I think it's very rational because
Yeah.
you're like, okay, what's the intentions? Which is beautiful. I think intentions actually is the only thing we can judge. The problem
Right.
is that we don't necessarily always know the intention of another.
Right.
Actually, we never know the true intention of another person. We
True.
can only guess, but we can't really judge actions because actions can be influenced by so many things outside of our control. But
Right.
like, for example, for yourself, you can only judge yourself in terms of your intention.
Right.
Right?
No,
Otherwise, it's unfair.
Well, I think if you feel like your intentions are, on the whole, as good as they possibly can be, I
Yeah.
mean, nobody's perfect. But if you feel like you generally bring good intentions to the table, and you sense, that I think I've gotten better at now, and you sense like, all right, these intentions of this person are not good, and it could be anything. I mean, I think it's also somewhat geographically based, in my opinion, because in LA, frankly, I mean, there's a lot of people who just looking to basically try to like get one over on you, in my opinion. Just my experience in Los Angeles. And so
There are places like that.
yes, there are places like that. I know
not
it's
just LA. It's
I
not
know,
just LA.
Not just LA. It's definitely in New York and other cities around the world. LA a little more in your face than other places, but I think in our experience of living in LA in 20 years, we've run into people who specifically were looking to try to take advantage.
And that's probably why you focused on intentions,
Yeah.
because you were in an environment when people had wrong intentions and then
Yes.
they wasted your time.
Yes.
And
But I
you
mean, that's
regret-
business and personal. So
Of
it wasn't
course.
just one or the other. I mean, so at the end of the day, the only thing I can do is reflect on myself of like, all right, what am I doing wrong? Because, if their intentions are bad or whatever, like I'm letting that person into my sphere, so it's my fault. So, and I think that's one thing I think both my wife and I've learned of, a lesson we've learned certainly from LA is on the business side and on the personal side, like a willingness of people, or actually a desire, some people in Los Angeles, because it's such a strange place.
Is it?
In terms of just like, I think the industry and everyone kind of being out there to kind of find themselves, that I think, at the end of the day, you get some people who are desperate, and desperate people do desperate things, and then you end up in situations where it's like, all right, how do I get into this situation?
Yeah, it certainly has a reputation for people with big egos trying
And
to
not-
satisfy those egoistic desires.
It does. I mean, look, it's a beautiful city in a beautiful state, one of the most beautiful states in the country.
Of course.
Unfortunately, I would argue not politically run particularly well, but I don't want to get into politics. But it's unfortunate what's happened in California in the last 10 years. It's really not what it used to be. It was kind of sad.
Now you have time in Switzerland.
Well, that's part of the reason we're there.
I see.
So it definitely influenced that decision. So no, Switzerland's an absolutely gorgeous country.
So Matthew, I am conscious of the time, so I want to ask you my last question.
Okay.
It's going to be philosophical. Get ready.
I think I need my wife here, because she's so much better at these questions than I am.
No, I actually really like that now you're alone, so
Yeah.
you have to stand on your own 2 feet.
Stand on my own 2 feet, exactly.
So how do you want to be remembered?
Wow, that is a philosophical question.
Sorry.
How do you want to be remembered? The only thing you can leave, obviously some people are exceptions because they have big lives, and so their memories, their fame, and everything else, and kind of what they left behind. I think it's really just, being someone who's like a very good provider for those around them. I would think if you've done that, I think at the end of the day, it's like how that touches how many people, because I think at the end of the day, you've got a ripple effect if you've influenced enough people, young, old, in between. And I think that, through my good fortune, I think I've had the luck to do that with a lot of people. And so I think that at the end of the day, I think can be the best legacy is you've had a positive impact both directly and indirectly on prospectively thousands of people. And I think that's the best way to remember it.
Beautiful. Thank you so much.
You're welcome.
That was a fascinating conversation.